The stock market can be a great way to grow your wealth over time, but it can also be complex and intimidating, especially for beginners. Here are some fundamental concepts and tips to help you get started in the stock market. 1. Understand the basics. Stocks. When you buy a stock, you're purchasing a share in a company. The value of your stock can go up or down depending on the company's performance and market conditions. Stock exchange. Stocks are traded on stock exchanges like the New York Stock Exchange, NYSE, or the Nasdaq. 2. Set clear goals. Determine your financial goals, whether it's saving for retirement, buying a home, or funding education. Your goals will influence your investment strategy. 3. Build a diversified portfolio. Don't put all your money into one stock. Diversify by investing in a mix of different stocks, bonds, and other assets to reduce risk. 4. Understand risk tolerance. Assess how much risk you're comfortable with. Riskier investments may offer higher returns but also come with higher volatility. 5. Learn investment strategies. Research various investment strategies, such as value investing, growth investing, or index investing. Each has its own approach and risk profile. 6. Educate yourself. Read books, articles, and watch educational videos about the stock market. Understand financial statements and market fundamentals. 7. Choose a brokerage. Select a reputable brokerage firm to open an account. Compare fees, features, and tools to find one that suits your needs. 8. Start small. Begin with an amount you can afford to lose. As a beginner, it's wise to start with a small investment and gradually increase it as you gain confidence. 9. Dollar cost averaging. Consider a strategy where you invest a fixed amount of money regularly, e.g., monthly, regardless of market conditions. This can help smooth out the impact of market volatility. 10. Monitor and adjust. Keep an eye on your investments and stay informed about market news. Be prepared to adjust your portfolio as needed. 11. Long-term perspective. Investing in stocks is often a long-term endeavor. Avoid making impulsive decisions based on short-term market fluctuations. 12. Seek professional advice. If you're unsure about investing or have substantial assets to manage, consider consulting with a financial advisor. 13. Practice patience. Stock market returns can be unpredictable. Avoid trying to time the market and be patient with your investments. 14. Learn from your mistakes. You may make mistakes along the way. Don't be discouraged, use them as learning experiences to improve your investment approach. 15. Stay informed about taxes. Understand the tax implications of your investments, as they can impact your returns. Remember that investing in the stock market involves risks, and it's possible to lose money. It's essential to have a well-thought-out strategy, do your research, and be prepared for both ups and downs. Over time, with the right approach, the stock market can be a valuable tool for building wealth.